Okay, I assume you all see this. Thanks, Nishal, for the introduction, and thanks again, Transport Events, for allowing MTBS to provide a brief presentation. This time I would like to focus on M&A in the port industry. I would like to tackle some developments we see, and I would also like to deliver a message to any investor in port assets, how to create your own opportunity. Focusing initially on a brief introduction of ourselves, we MTBS have traditionally been a financial and strategic advisor in the port sector. One of our affiliates, Port Finance International, has always worked on providing courses in port finance to experts and internationals worldwide in PPP and port finance. We also organize with Port Finance International several large summits yearly focusing on port finance. Recently, we established MTBS M&A, which focuses on the mergers and acquisitions advisory in the port sector. We are active worldwide and have worked on various transactions, either PPP or M&A, on practically all continents. And we see a lot of developments in the M&A market right now. So this presentation focuses therefore on the M&A market in the port industry. What we note is there are several trends in this market, which most of you are obviously aware of, which are important also for the M&A sector in ports. So first of all, we are all aware of the shipping line consolidation and the increasing vessel sizes. Listening to Jonathan, it is indeed apparently questionable whether this vessel size increase will happen in the future as well. Still, we note that a lot of new vessels are getting bigger and bigger. Digitization and new technologies are becoming more and more important, as is the environmental aspects of and sustainability with regards to shipping and ports. We also note that world trade is impacted by political development, trade wars, looking at Brexit, the current situation in Hong Kong, etc. When we look at some recent projects, and I think these three assets complement the list earlier shared by Gagan, we note that there have been some really big deals last few years, which can be seen below, amongst others, Gdansk, Long Beach, and DP World acquiring assets in Chile. Others are Euroports, and obviously the deal in Turkey, Mersin. These are big deals. We note high EBITDA multiples, and for us it is also very interesting to see how the market will develop, taking into account COVID-19. We also note that large players step into horizontal and vertical integration. A clear example is CMA acquiring Siva Logistics, and another clear example is DP World acquiring a feeder line, leaving the traditional terminal operations but stepping into actual shipping. And we also note that other terminal operators are establishing short sea or feeder shipping lines themselves. Now, how will this develop in the future is important to note. And when we look at the market, we do expect more horizontal integration in shipping. We expect vertical integration in the port sector. And the main trends we believe will drive the M&A in the next 5 to 10 years will be the horizontal integration in shipping, more involvement of financials in ports. We note the recent news that TTI Algeciras has sold a share to a party. We believe this could well be a financial party stepping into a transshipment terminal. We see vertical integration of ports into logistics, stepping into the supply chain and not only being a node in the supply chain, but becoming more than only a node. And the involvement of contractors as shareholders, as developers of ports, dredging firms and other contractors becoming active shareholders in new port developments, but also in existing ones. Now, all of this is heavily impacted by COVID-19. Clearly, the effects are not entirely clear yet, but we do note that initially a lot of M&A deals were delayed. We do expect, as Gagan mentioned, that there will be more M&A deals in the near future, as we expect there will be more PPP deals in the near future, but the exact impact still needs to be seen. We do believe there is a large opportunity regardless of COVID-19, but I think strengthened by COVID-19 for any port investor, how to, on a new tactics on how to approach the market. And actually, I mean, how to create your own opportunity. So our view on the port investment market is that we note that a lot of investors are fairly reactive, responding to demands or requests by sellers for a price, but not really proactive. So we believe there's a world of opportunities waiting for any port investor, but there needs to be a different approach. Rather than waiting for a seller to approach you as a buyer, we believe there could be a proactive approach, whereas you actually approach interesting assets and discuss with them the opportunity to step in or to buy the full asset. And to give you some examples, and I do want to note the asterisks I put here. We have none of these companies have explained or expressed to us that they would actually be willing to sell. But we see a lot of family-owned businesses worldwide still in the port sector. Smaller ones, like in the Netherlands, Zeehavenbedrijf Dordrecht, which is a family-owned company operating several terminals in the Netherlands. Grain bulk handlers in Kenya, the largest grain terminal in Kenya. Probably many of you will know Comelda de Mozambique, which is the port and terminal operator in Beira, Mozambique. And another example could be the terminal owned by the Clean family in Rio de Janeiro, next to the recently purchased terminal by ICTSI. And typically, these are local family-owned, or at least family-owned businesses, which could possibly be interesting for potential investors. In addition, and I think that's also something Gagan mentioned, is we see an opportunity for potential carve-outs, especially during this COVID-19 crisis. To give you some examples, we see, and again, I must stress that none of the companies have actually expressed any willingness to sell. An example could be Tata Steel IJmuiden. It is a large steel factory. They have more than 80 hectares of bulk terminal assets. Tata itself has been looking at selling part or all of the assets in the Netherlands. I now talk about the full factory for a while, and they've looked at establishing a joint venture with ThyssenKrupp. But they will not leave. They are too critical for the Netherlands, for the Dutch economy. So it could be of interest to look at a carve-out of the bulk facility. Same actually for Rio Tinto in Madagascar. They have built a very nice small port, which serves their mining operations, but it could do much more than only serve the mining operations, and a potential carve-out could be considered. Another example, which I list here, is the terminal of Grimaldi in Antwerp. We are all aware of the huge effect COVID-19 has on the RoRo volumes. This is a terminal which not only serves RoRo, but serves all the commodities handled by Grimaldi. It could be of interest for any financial or other investors to step into a terminal like this. Obviously, Bunge as a big grain handler has many terminals worldwide, and creating a partnership with them would also be of interest to probably many potential investors. What we do wish to stress is we believe there could be a really good opportunity for port investors to proactively identify these opportunities and approach the owners of these assets, rather than waiting for an asset to be brought to the market. And I think as MTBS, and I believe that is our unique proposition, given our worldwide portfolio in port consulting projects, we can assist any investor in identifying these opportunities. And given the recent establishment of our M&A branch, we would also be more than happy to assist any investor in the further continuation of their buy side. In them buying a potential terminal throughout the full advisory services. So my main message again, there are many opportunities, especially due to COVID-19, and we will be happy to assist you or anyone with finding these opportunities and creating the deal. Thank you very much.